This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Let's go through and have a look at an example. This example goes through and focuses on the statement of profit or loss. And like within the exam, you're not to know whether or not you have a step acquisition or whether you have a step disposal or whether you even have both until you go through there, read the requirement and understand the specifics given to you within the question. So let's go through and have a look at it, shall we? So what we've got is it says as the requirement at the bottom, prepare the consolidated statement of profit or loss for the Maryland group. So Maryland there must be the parent. And the key bit here, whenever you have an acquisition or disposal within a question, is that you note the year-end date. So here the year-end date, particularly with regards to profit or loss, is vitally important because you may have to prorate the results during the year. Okay, so here the year-end is the 31st of December 2015. You can go through and see up there, can't you, that you've got the standard format in terms of your statement of profit or loss, revenue, and then all your costs right the way down to your profit for the year. The important bit is the information at the bottom, isn't it? It says there that Maryland acquired 75% of the equity share capital of Tansy. So that must mean there that Tansy has been a subsidiary, and Tansy has been a subsidiary since the 1st of January 2012. Okay, so 12, 13, 14, 15, 4 years up until the end of this year, it is a subsidiary. But we need to read on to see whether there's been any changes in ownership within that 4th year. Okay, so it says that key bit, isn't it? On the 1st of April 2015, Maryland disposed of a 10% holding in Tansy. Okay, so there has been a disposal. We've finally found out what actually happened. So here there's been a disposal. So what I would do is, before I go through and plow into putting in everything that you know with regards to the statement of profit or loss, I think it's quite handy just to put in a little bit of a working to help you understand exactly what's happening. So we're there, aren't we, at the start of the year? The 1st of the 1st is it 2015. The end of the year is the 31st of the 12th, 2015. What happened there, if memory serves me right, was it there, I think, part way through the year, the 1st of April 2015, there was a disposal, wasn't there? We disposed of, was it 10%? So what we previously had was a 75% owned subsidiary, whereby there was a 25% non-controlling interest. We've disposed of 10%, so we now have 65% as an ownership, but we still have control, don't we? We still have a subsidiary, but the subsidiary now has a 35% non-controlling interest within it. Now, that's the important aspect, isn't it? There's been a change in ownership. We haven't crossed the accounting boundary, because don't forget there, what we have is that we have control and we have control. So there's no need to actually prorate the results of the subsidiary, is there? Because we've controlled it for the full 12 months. However, the big concern is to do with the non-controlling interest, and the non-controlling interest percentage has changed. So when we're calculating the non-controlling interest, we're going to have to prorate the profit, aren't we? So for the first 9 months, we had control, but we owned 75, so the non-controlling interest owned 25% of those profits for the first 3 months. And then is it for the following 9 months, when there was that change in ownership, the non-controlling interest went through there, didn't it? And changed to 35%. So we're going to have to take 35% of the 9/12 of the profits for that latter part of the year, aren't we? Okay. So the issue here isn't about thinking about the journal entry with regards to the change in ownership. So we've disposed of some shares so that you debit the bank, you credit the non-controlling interest, and you credit, is it there, your other components of equity. That entry to the credit to the other components of equity takes place in the statement of changes in equity. So there's no need to adjust for that here, because we're just focusing on profit or loss. Okay, so you don't need to go through there and do any adjustment at all to your other components of equity. So here, essentially, all we're going to go through and do is just prepare a standard statement of profit or loss. As my computer nearly fell on the floor, apologies. A standard statement of profit or loss, and then just play around with the non-controlling interest at the bottom. So what we've got is we'll do it in full. So we're going to go through there and look at our group statement of profit or loss. We have there, is it the revenue? Now we could take shortcuts, but we're not going to. We're going to have P, we're going to have S, the adjustments, and then the group. You know, we've kept it very simple. There are no adjustments. There's nothing else that's going on. Okay, so 2468 1664. Okay, so 2468 1664. There's no adjustment. There's no intracompany sales, are there? So 2468 plus 1664 gives me there, is it 4132. Okay. Cost of sales, where you'd normally expect there to be quite a few adjustments to do with PUP adjustments and maybe depreciation on fair value. 1808, 1287. So 1808, 1287. So 1808 plus 1287 is that the 3095. Again, there's no adjustments in terms of your intracompany sales, so nice and straightforward. Does that give me 1217? Okay. Next, you've got are your expenses of 285 and 156. So 285, 156. Again, bear in mind, I'm not prorating anything to do with the subsidiary, am I, just yet? Because we've had control for the full 12 months, haven't we? Okay. 1217 less 441 gives me 776. Okay. Finance costs 83 and 39. 83 plus 39, does that give me 122? Does that give me 654 as my PBT? If I'm going through there and looking at PBT, yep, tax 53 and 36. 53, 36 gives me 89. 654 less 89 gives me 565, doesn't it? So the group profit for the year is there as 565, isn't it? Okay. What we then need to go through and do there is we need to total up S's column. Well, we don't need to physically total it up because we know what it is already. There's been no adjustment, so it's there, isn't it, as the 146. And then what we need to do is we need to split the group profit for the year into the amounts attributable to the parent and the non-controlling interest, which is finally where we have to do a little bit of work, isn't it? Okay. So what you've got there is that the non-controlling interest was 25%, wasn't it, for the first 3 months of the year. So we will take 3/12 of the 146. And then for the last, was it 9 months? It was there as 146. Okay, so 3/12 of the 146, 9/12 of the 146. The first 3 months was a 25% NCI, and the second 9 months was there, was it 35%? So let's just tap that into your calculator. 146 times 3 divided by 12. And take 25% of that is 9.125. 9 divided by 12 times by 146 times 0.35 gives me the 38.325. Excellent. Totaling that up for the NCI gives me 47.45, or 47.5 if you wish. I'm genuinely not worried. And then the amount attributable to the parent, 565 less what's attributable to the NCI, gives me there is it 517.55. Okay, that's it. There wasn't anything too difficult about that question there. So remember to adjust for the changes in the ownership percentages. So 25% NCI to start off with, 35% subsequently following the disposal. And you need to make sure that you prorate it correctly to ensure that you get the correct NCI for the correct portion of the year. Okay. If you can do that, then you can do any statement of profit or loss question involving step acquisitions, step disposals. Just bear in mind that the statement of profit or loss questions obviously in the exam get a lot more challenging because there's all the extra bits of information that cover the accounting standards aspects that are regularly tested. Other than that, work your way through the chapter, make sure that you're happy with it with regards to your changes in group structure. Once you've done that, you can begin to start answering some of the questions that you have within the revision kit of your chosen tuition provider. Other than that, I'll see you all in the next session when we begin to go through there and have a look, if memory serves me right, is it there at the world of foreign currency. So I'll see you all a little bit later on.